Welcome, welcome, welcome. Accounting and Management Made Simple is your channel of choice where we break down complex and difficult accounting and management principles into simple, understandable concepts. Whether you are a student preparing yourself for exams or a professional looking to apply knowledge practically, this channel helps you to grasp and understand complex key topics with ease. Please subscribe, share, like, and comment. Thank you. Today, once again, I want us to study how to prepare a three-column cash book. How to prepare a three-column cash book. I've already taught how to prepare a two-column cash book. That is very fundamental. It is very important you realize that a three-column cash book is a building upon a two-column cash book. We are building upon what we have done on the two-column cash book. And if we have been a blessing to you, I want you to subscribe, like, share, hit the notification bell so that every time we are generating this kind of videos, we will be notifying you. So today I want us to prepare a three-column cash book. I want us to prepare a three-column cash book. And again, I want to repeat, I have already taught about how to prepare a two-column cash book because a two-column cash book is the foundation of what we are about to do. Now, a three-column, what is a cash book? I always say, cash book, it is the bringing together of the cash account, the bank account, and the discounts account. Cash, bank, and discounts. So we start with discount allowed, then we go to cash, and we come to bank. And then we say date details. The details we said, the date is the date when the transaction took place. The details is the corresponding account. The details is the corresponding account. The discount allowed, it is so the date is the date of transaction. The details is the corresponding account because we said that the cash book is part of the double entry. The cash book is part of the double entry, and we get the date details, discount allowed, cash, and bank. Now, discount allowed, the other side, maybe we draw the other side also. We say date, details, discount. Please note that the difference between discount allowed and discount received, they are not the same account. Students confuse, and they think we are dealing with the same account when we say this cash is this cash, this bank, this cash records the money received, and this column records the money paid in terms of cash. This column records the money received in terms of check through bank, and this column records the money paid through bank as a check. But this and this have no relationship. Never forget that. Discount allowed and discount received have no relationship. Discount allowed is an expense. Discount allowed is a what?
Expense.
And discount received is an income. Discount received is a what?
Income.
Now, discount allowed is what we give to customers when they pay their debt by the set date. If we tell our customers, I've sold you goods worth 1,000,000 shillings, but if you pay before the end of 1 month, I'll give you 10% discount. What we do, when we are selling, we create debtors account. When we are selling, we will credit sales. Account with 1 million, and we say debtors. The corresponding account is debtors with 1 million. The corresponding account is debtors with what? 1 million, and here we say sales account. We say sales account. Now, Peradventure, we tell this customer, if you pay before the end of the month, we will give you 10% discount. And 10% of 100,000 is 900,000. So what will happen is this customer comes with a check of 900,000 before the end of the month. So we will debit our bank, with 900,000 as we credit debtors with 900,000. We say, bank, we have received money in the bank, 900,000. So we had a debt of 1 million. We have received 900,000, but our debtors account still have a balance of 100,000. To remove even the 100,000, again we will credit debtors with 100,000, but we will debit discount allowed 100,000. We will debit discount allowed in the cash book with 100,000, and we will say debtors. And we say what?
Debtors.
We say debtors. We will say debtors. We will say debtors. Now you can see discount allowed is writing off debt. Is writing off debt. Discount allowed is writing off debt. And here we say discount what? Discount allowed. Discount allowed. Discount allowed. Discount allowed. Discount allowed. Now that is about sales. What about if we buy on credit and the supplier supplies goods to us on credit? If we buy goods on credit, we are doing purchases. We are doing what?
Purchases.
If we purchase on credit, we will have an account called purchases. We have an account called purchases and trade creditors. And trade what?
Creditors.
Trade creditors. Assume that we buy goods worth 1 million shillings. So we will debit purchases with 1 million as we credit creditors with 1 million, and then we cross-reference. Here we say purchases, here we say purchases, and here we say creditors, trade creditors. We have bought goods, and this supplier is a good supplier. He tells us, if you come before the end of 1 month, we will give you 10% discount. That will mean we are earning an income called discount received. We will receive the discount. We will receive the what? The discount. The supplier will discount what we're supposed to pay. And therefore, when that happens, we will come with 900,000. If we pay before the set time, we will credit trade creditors with 900,000 as we debit trade creditors with 900,000 to reduce the creditors we are paying as we credit bank. As we credit what? Bank. We are paying our suppliers. We credit bank with 900,000 because we are paying our suppliers. And here we will be saying details is trade creditors. Trade what?
Creditors.
Trade creditors. Trade creditors. We are paying our supplier 900. Instead of paying 1 million, we are paying how much? 900,000. Our bank reduces to 900,000. Our bank asset of bank reduces to 900,000. But the account shows a liability of 1 million. And therefore, to write off the remaining balance, we record a discount received of 100,000. So we credit trade creditors with 100,000. We reduce our liabilities with 100,000 as we by debiting creditors, as we credit discount received with 100,000. As we credit discount received with 100,000. Now, discount allowed is an expense. Under the operating expenses, we record an expense called discount allowed. But discount received is an income. Under other incomes in the income statement, we will record discount received amounting to 100,000. Now, this cash column and the bank, this cash column and this cash column is that we treated the same way we treat the 2-column cash book. All the monies we receive in the business, be they from debtors, be they from sale of our other non-inventory items, we will record them as money in, either in cash or in what? Bank. If we sell anything in cash, we credit sales and we debit the cash column. We credit sales account, we credit sales account in the general ledger, and we debit cash. If we sell if the supplier gives us a check, if the supplier gives us a check, we will record an increase in money in the farm. So we debit bank as we credit the debtor's account. If we sell to a debtor and that debtor pays us, our money increases in the bank. If he pays us in check, so we debit bank column and we credit sales account. We credit sales account. Maybe I further show it by example. Assume we sell inventory in cash worth 50,000. We sell inventory in cash worth 50,000. What we will do, we will debit. It will result to an increase in an asset of cash. If we sell inventory in cash worth 50,000, our cash will increase with 50,000, and an increase in an asset account. In an asset, we debit the asset account. We debit cash 50,000. We debit cash. If we are making sales and we sell in cash, our cash will increase 50,000 and our sales will increase with 50,000. And we say it is cash. It is cash. Our sales, you credit sales with 50,000, you debit cash with 50,000. In case we sell on credit, we will credit sales with the 100,000 and we debit debtors. We debit debtors. If we sold on credit, we debit debtors with 50,000. We debit debtors with 50 what? Then we close reference. At the sales we say debtors account, and debtors we say sales what? Account. If we now collect this money and we collect the debtor gives us a check of 50,000, we will come to the bank and we show an increase of bank of 50,000, an increase of bank of 50,000, as we record a reduction of debtors of 50,000, and here we close reference. Here we say bank account, and here we say debtors. Here we say what?
Debtors.
Debtors. Debtors account. Sales account. So you can see all of them. Never forget your description. The last initials must have A/C to record your capture that you are giving us the corresponding account. Because the corresponding account where we are crediting. The corresponding account where we are crediting when we are making payments once more. You know, many students tend to think that the cash book, you debit cash, you credit cash. No. The only, you either debit cash and credit another account, or you credit cash and you debit another account. The only time we debit and credit cash is when we are moving money from cash to bank or from bank to cash. Let's give an example. Now, we have received all this money in the bank. We want to get money from the bank to bring it to cash. So our money in the bank will reduce. Assume we want to bring 10,000 to cash. We want to bring it to the office. So we come here and we say on 10th of May 25, we are reducing our bank. So we credit the bank and we are taking it to cash. You're taking it to what? To cash account. You take it to cash account. So bank reduces by crediting bank with 10,000, and cash increases by debiting cash with 10,000. And we are saying here it is coming from the bank, and it's not just bank, it's bank account. And here is saying it is going to cash. It's going to cash. We may also decide, okay, fine. Now we have a lot of money in cash. We have 60,000 in cash. We want to take 5,000 or 10,000. We want to take maybe 20,000 to bank. So our asset of cash will reduce, and the reduction of an asset, we credit the asset account. So we go to the asset column, we credit it to the 20,000, and we say it is going to bank. It's going where?
To bank.
To bank account. So we are reducing our cash by crediting cash, and it is going to bank. So we debit bank. We debit what? We debit bank with 20,000, and bank, we say it is coming from cash. It is coming from what? From cash account. The only time that the two entries affect the cash book is when we are moving money from cash to bank or bank to cash. The other times, you are either debiting cash and crediting another account, or you are crediting cash and you are debiting another account. There must be compliance with the double entry rules. There must be compliance with the double entry what? Rules. There must be compliance with the double entry rule. I want to repeat again. The only difference between the double column cash book and three-column cash book is that the three-column cash book has a discount allowed column on the debit side. Why is it on the debit side? It is on the debit side because the discount allowed is an expense. Because the discount allowed is a what? An expense. And an increase in an expense, we debit the expenses account. That's why we put it on the debit side. An increase in an expense, we debit the expenses account, and that's why we are recording it on the debit side. Now, discount received is an income. Discount received an income, and an increase in an income, we credit the income account. An increase in income or revenue, we credit the income account. And therefore, we are recording the discount received. We are recording the discount received. We are recording the discount received. Now, it is worth noting something very, very important about this one. Now, at the end of the period, that the 1st of May 25, we say balance carried down. Now, we get the total debit. For instance, in our case here, total debit here is 100,000. Total debit here is 100,000. Now, and here is 60,000. Here, 900, 950, 970,000. Yes? So we say balance what? Something very, very important. We do not have a balance carried down of discount received. This column, we don't say, the way we do with cash and the bank is not the way we do with the discounts. The discount, we get our total of the discount, 100,000. We get the total of the discount here, 100,000. We do not say the debits minus credit. Very important that you know that. In accounting for discount, this account and these are not related. They are not related. This one could be having 20,000, maybe from another source. So, and therefore, this has a total of 120,000. 120,000. These two accounts, the discount allowed of 100,000 and the discount received 120, they are not related. This is an expenses account and this is an income account. This is an expenses account and this is an income account. Something you must note is that as we debit discount allowed, we are crediting the corresponding debtors account in the debtors ledger. We are crediting the corresponding debtors account in the debtors ledger, not in the general ledger. Not in the general ledger. Not in the general what? Ledger. Not in the general ledger. So we are reducing the individual customer's account with this amount of money. The same thing with this, we take it to the trade creditors ledger. We take it to the trade creditors ledger, not to the general ledger. These are subsidiary ledgers. Very soon we are going to be teaching about the three types of ledgers, three main types of ledgers. We have trade creditors ledger, which is also called accounts payable ledger. We also have debtors ledger, and we have the general ledger. So this one goes to the ledgers. On a daily basis, they go to the ledger, but I'll tell you where you take the total at the end of the period. So when we are getting the balance carried down, we do not, many of my students will give you total discount allowed, you subtract total discount received to give you balance carried down. We don't have a balance carried down here, but for cash and bank, we have a balance carried down. So total cash is 60,000 minus 20,000. We say the balance carried down is 40,000. The balance carried down is what? 40,000. This one, bank, is 970 minus 910. The balance carried down is what? 60,000. So the total here, 6,000, becomes the 60,000 there, becomes the total here, 60,000. The total here, 970,000, becomes the total here, 970 what? 970,000. Very, very important. The only difference between a double column cash book and three column cash book is the discount account. And the discount account, on a daily basis, we debit the discount column as we credit the individual debtors account in the debtors ledger. As we credit the individual customers account in the debtors ledger. For the creditors, on a daily basis, we debit the discount received account and we credit the discount received account as we debit the individual suppliers account in the creditors ledger. As we debit the individual suppliers account in the creditors ledger. But periodically, somebody say periodically. Periodically, we get the total of the discount allowed. We say it is 100,000. At the end of the month, we say it's 100,000. And we now go, remember we have been dealing with the subsidiary ledgers. Now we go to the general ledger. We go to the general what?
Ledger.
We go to the general ledger. We go to the general ledger. And we know that discount allowed is about debtors. It is us allowing our customers not to pay. It's us allowing our customers to do what? Not to pay. This being the general ledger, in the general ledger we have what we call control accounts. In the general ledger we have what we call control account. So we have debtors control account. We have debtors control account where we bring all the debtors added together. Maybe the balance brought down. The balance brought down was 900 million, 9 million. The balance brought down is 9 million, but our discount allowed is 100,000. So we also have an account within the general ledger called discount allowed. So at the end of the period, periodically, we will, because also periodically the balances in the in the debtors, individual debtors account to come here, we will now debit discount allowed here. We will assume that it's like we are debiting this figure of discount allowed. We will be saying we have debited discount allowed and we have credited debtors ledger with 100,000 from discount what? Allowed. We are reducing our debtors. We are reducing our debtors with 100,000. It's like this account is being taken to the general ledger. And that's how now, or even the cash account becomes part of the general ledger. The cash account becomes part of the general ledger. So it's like we are capturing this discount allowed. All the debits here go to reduce the debtors in the debtors control ledger, control account in the general ledger, so that we can now have the balance carried down. We can have the balance carried down of 8,900,000. 8,900,000. 8,900,000. 8,900,000. 8,900,000. 8,900,000 what? 900 what? Thousands. 8,900,000. That is the most important thing you need to know about the 3-column cash book. I want to repeat. If you want to understand this cash book, you need to study the 2-column, because I have a video which I've explained in details how to prepare a 2-column cash book. And this 3-column now is building on the 2-column cash book. The only difference is the discount allowed and discount received. Discount allowed is an expense. Discount allowed is an expense, and discount received is a what? Is an income. Discount received is an income. Thank you very much. Once again, I want you to subscribe, share, and hit the notification bell so that when we load our new videos, we are able to notify you. Thank you very much.